Welcome to the virtual roadshow series on Channelchek. Today we are featuring Sierra Metals, NYSE American ticker symbol SMTS. Research coverage of Sierra Metals is provided by Noble Capital Markets. Noble is a FINRA licensed SEC registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Mark Reichman, the Noble Senior Analyst covering Sierra Metals, will ask our presenter a selection of the questions received. The source of the questions will remain anonymous. Here is Luis Marchese, CEO of Sierra Metals, to make the presentation. Ed Guimaraes, CFO, and Mike McAllister, VP of IR, will also be available during the Q&A session. Luis, take it away.
Thank you. Thank you, Mark. Thanks for Noble for letting me reach to the investor community. Well, the objective of this presentation is to give you an update on a description of where Sierra is at the moment and how we see a bit on the future on our three operations. The second page is the usual disclaimer. You might want to take a look at it and see what the disclaimers are for this presentation. So let me start with the COVID-19 update. This certainly has been a major disruption for everybody, and Sierra Metals is not far from it. In operations in Peru, we could keep on operating during March, April, and May, but at a reduced pace since the government allowed some activities related to maintaining the environment and maintaining it as an essential service. But in June 5th, they activated the phase 2 of the economic recovery, and now we can go to full operation. So since then, we have been recalling our employees and contractors to ramp up the mine operations to full capacity. This is fairly complex because the whole country was brought to a standstill in mid-March. So we are putting the logistics in place, the systems, and the team members, and also going through a quarantine. So that's where we are at the moment. But we feel that provided we have some spare capacity at the plant, we might be able to recover most of the lost production before year end. On Mexico, effective June 1st, also the Mexican government deemed mining an essential service. Since then, we were recalling the employees at Bolivar. We are still doing that, and the mine is operating, but not yet to full capacity. We are ramping it, and hopefully we'll have it at full capacity by the end of the year. Cusi mine, we restarted production on July 27th, Monday of this week. The mine had been put on care and maintenance because it is next to a small town where we feel it was prudent to keep operating while on the pandemic. But now we are back on business, and we are still determining the best path to complete the development and to reach the throughput targets, which is the capacity of the plant at 1,200 tons per day. So overall, we are being quite strict on our approach to how we deal with the pandemic. Sorry for that. So we are, in all of our operations, we are testing and quarantining our employees before they join the workforce. And at the sites, we are monitoring the daily health of everybody. As a result of that, we have suspended the guidance until the effects of this pandemic are better understood. I should mention here that we are still in a difficult situation in Peru as a country. The number of people that have been infected doesn't go down. So, and the number of people that is regrettably dying is still going up. So, particularly that's happening in the area where Yauricocha is. So we're still being extremely careful on how we deal with this pandemic. Same thing is happening in Mexico. So again, we are being stricter than ever on our approach. but this is certainly affecting our operations. Okay, let me go to a brief description of Sierra. We have 3 operations, one in Peru, Yauricocha, and 2 in Mexico, Bolivar and Cusi. On the pie chart on the right-hand side, you can see the pie on the metals that we mine and the source of revenues. So copper is our largest source of revenue with 39%. Next, we have zinc, but then we have 27% coming from precious metals, both silver and gold. And lead lags at the end with some 11%. So if you add copper and precious metals, we are now closer to 70% of our total revenue source on those. So it's a diversified producer, it's growing. We have a strong copper and precious metal exposure. We have a solid balance sheet. We are profitable and we are capital flow positive. We've had over the last few years a successful history of building mineral resources and reserves. There has been a strong focus on the company to grow the asset base, and the company has been quite successful on that. And we now have an excellent potential for further organic growth. We operate in 2 well-known and established mining jurisdictions, Peru and Mexico. In Peru, our Yauricocha mine has been operating for over 70 years, and now Bolivar Cusi has been operating for hundreds of years, and Bolivar already has close to 10 years operating. So we are well established, which is quite a value in itself. And something that I enjoy very much is that, and like, is that we have an experienced management team and a board of directors focused on maximizing the per share value. In terms of capital structure, we have 162.8 million shares outstanding, $37 million cash on hand, and 99.5 million on debt. We have research coverage from 4 firms. Our management and board of directors own 59% of the company, and the major shareholders are Area Resource Capital and BlackRock with 52% and BlackRock with 7.7%. Our share price has been going up since June, and now as of July 28, we were in $2.27 Canadian dollars. So it's going up to levels last seen in 2019. So we have 3 mines in 2 countries. In Peru, we have Yauricocha. We own 82% of it. We have a current mill capacity of 3150 tons per day. As we'll see later, we have the alternative to grow. Our cash costs in the first 3 months of the year have been in the order of $1.17 per pound of copper and $2.24 all in. In Mexico, it's 115 and 185. In Bolivar, it's a 5,000 ton per day operation. And also we have in Mexico the Cusi silver mine, well, the mill capacity of 1,200 tons per day. And our cash costs for the first quarter of the year were in the order of $30 per ounce. So as I said, in the trailing 12 months of the year, we had close to 70%, but in the first three months, we're getting closer to that level between copper and precious metals. Well, this is the history of growth of the company. As you can see, in Yauricocha in 2015, we had 2,400, now in 3,150, and early next year we would like to have it at 3,600 tons per day. In Bolivar, we've gone from 2,400 to 5,000 as we speak, as mill capacity, and in Cusi we've doubled from 600 to 1,200. For the coming years, we are looking at growing the capacity of our plants to 5,500-ish on Yauricocha. We still have to determine the final level through the appropriate studies. Same thing with Bolivar and same thing with Cusi. Why we believe that we can go higher? That's because we have the resources to go there. And that's where we go with this slide here. As you can see in the bottom left graph, in Bolivar, we've gone on resources from 18 million to 41 million in 2020. In Cusi, we had 3,200,000 tonnes in 2016. Now we are at 6.8 million tonnes. And in Yauricocha, even though it's a very old mine, we've been able to maintain our resource level. So this sort of resource allows us to think about growing and getting more value from this asset base. Well, the company has a solid financial position. Over the years, we have not diluted the outstanding shares. The EBITDA has moved between 81 million, 89 million, and 65 million in 2019. Actually, for the first quarter of the year, we had 16 million. Our free cash flow, even though we've been generating cash, it has been a very strong capex strategy to grow and make sure that we had the resource base. So our net cash flow last year reached $21 million. Our cash and cash equivalents at the moment are $36.9 million. So let me go to the operations. Yauricocha, this is a picture from the surface, and you can see at the middle the central mine, which is the mine that had been mined since the 60s of last century. Now you have Cuye, Mascota, and Esperanza, which have been brought into operation in the last few years. And that's a view of the plant. So on Yauricocha, as you can see in the tonnes per day, last year we had close to 3,200. Now, due to the COVID, in Q2 we had 3,300, but for the 6 months we had close to 2,800 tonnes, and that's where we want to recover for the end of the year, provided that we have spare capacity. Our cash cost per copper has been in the order of 107 to 117 this first quarter of the year, and then all in reached 224. Our revenue mix, this is a truly diversified polymetallic mine. So you have copper, zinc, lead, gold, and silver. It has the full suite of the metals that we produce. The copper equivalent production has been certainly lower in the first 6 months of the year, but we are planning to recover part of that production between now and the end of the year. So Yauricocha, as I said, has been operating for quite some time. You can see on the graph the areas where it has been operating, and we still have growth potential at depth and on horizontal. And this is right on the area where we are operating at the moment. But you can see on this graph on the next page that the mine is still, you can see here on the right hand side where it says central mine area, that's where we are mining. But we are in a district along the Yauricocha fault and the Chonta fault where we are very positive and optimistic that we are going to keep finding some more ore. As we speak, we are now aiming to drill at Quilcasca and Doña Leona and see if we can get some more ore for the near future from these areas, because they would be closer to surface than the one that we are mining now. So we are exploring and we are very active on this area. In Bolivar, well, this is a very nice picture. Here you can see on the side of the mountain the green from the copper oxides. So this is certainly visually a copper district. You can see for the year, actually this year we've been able to process more tonnage than we had on average for last year. At the moment we have 3,900 tonnage per day. As I said, we're aiming to reach 5,000 by the end of the year or early next year. It's a copper mine. The cash cost is going down. On the first 3 months of the year, we had 115 for the cash cost and 185 for the all-in sustaining cost. and we expect for the future to reach to maintain this sort of costs. Now, provided COVID doesn't disrupt more our operations, obviously. The revenue mix: copper 65%, and we have silver and gold for 16% and gold for 20%. This is quite exciting because these three metals have certainly been quite successful in the prices in the last few months. Our copper equivalent production, it's going up, as you can see on the graph on the bottom right-hand side. Well, in Bolivar, we mine in two places. We mine the Mina de Fierro and Bolivar West. And we are now going to the Bolivar West extension. We have more areas to explore, very close to where we are operating, particularly close to Bolivar West. And we have some geophysical anomalies that we found, and we feel that the mine is open to the southeast, to the northeast, and to the southwest. So we have plenty of space to explore, and we are certainly doing that. As you could see in the resources, we've gone from 20 million tons of resources to 40 million as we speak, and we are very optimistic to find more resources for the future. Cusi, in the last few months, as we were in care and maintenance, our team was certainly doing their homework at site, and they were looking very carefully at the geology, and they've come up with a new interpretation of the geology, and that's coupled with a new high-grade silver discovery. So let me go into the detail later. So the tonnage processed in Cusi for the second quarter have been zero because it was in care and maintenance, and for the 6 months were 77,000 tons. The revenue was 3.2 million. Certainly has been on the red side on the EBITDA, on the all-in sustaining cost at $30. Now we are back in business. I think that 2019 and the first quarter of 2020 have been heavily impacted by the subsidence event. That event now is behind us. We've done the development to go below the area that was impacted. The plant is now in very good shape. So we should now, on this new production that is coming on stream, be in a much better position than what we were in 2019 and the first quarter of 2020. Well, in the revenue mix, you can see that the silver is 93%, gold is 7%, so it's clearly a silver mine. And as we speak, we've gone up to production, so hopefully we'll recover some of the production that we lost while we was on care and maintenance. Now, about the new discovery, the mine has been developing on the Santa Rosa de Lima area, which is along this fault here. These are the mines, the area that we've been mining and that we are mining: Promontorio, Beta Grande, Santa Rosa, Promontorio, Beta Grande, and San Nicolas. But on the Santa Rosa de Lima, the interpretation was that the fault was widening into a sort of a stockwork system. Now, and the geologists and the team on site, they went to look very carefully at what we were finding, and the interpretation has changed to a new high-grade silver vein system. And this was also discovered as a result of a number of the development work and some confirmatory drilling that was done. And you can see the sort of widths and grades that the team has been able to find on the place. So at the moment, we are very, very excited about this new high-grade area. We are currently drilling up to 1,000 meters, and we believe that we are going to be quite positive on what we find and be able to measure some resources in the near future and actually start mining in this area for this year. So these are the why invest in Sierra Metals. We have a diversified asset base. We are now moving into more and more presence of copper and gold and silver into our revenue base, which are very strong metals at the moment. But we also have silver and lead on a very good mine, which is Yauricocha. We have quite good grades. So even though they are not as exciting in terms of price at the moment, we have a very good asset base on those two metals. We have a strong growth story that has been quite consistent over time, over the last few years. As I said, we work in well-established mining jurisdictions in Peru and Mexico, the very good team that we have in place, and the support of the board, which is certainly very focused on per share value, the solid financial position, and we have quite a robust operational track record. So that's why we believe Sierra Metals is a good company where to invest on. Thank you.
Thank you, Luis. I'm Mark Reichman, the Noble Senior Analyst who provides research coverage of Sierra Metals, and I'm going to read the questions submitted for Luis's response. So the first question, Luis, is that the company recently announced plans to resume production at QC to ramp up to 1,200 tons per day by the end of the year. With the recent discovery, how does that impact the growth outlook at QC and influence your decisions to potentially increase production to 2,400 tons per day?
Well, we're very excited about this new high-grade area, Mark. So we are currently defining that resource. As I said, we are drilling 1,000 meters on the area. So we still don't have any numbers there, but certainly besides the ones that we've already shown to the market. Now, regarding the impact about this new area on growing the mine, we are working on starting the right studies to make sure that it's value accretive to grow. We believe, but we've got to make sure that it is, and it's done right. So as we speak, the management team is focusing on preparing for the next stage of growth at QC.
The next question is, on the last earnings call, the company indicated that Sierra had entered into discussions with strategic partners. While it is very early on in your role as CEO, what strategic partners would make sense for Sierra, and at which mine, and for what purpose?
Well, like you said, it's very early. As we speak, Mark, we're very focused on the operations themselves and organic growth. Certainly the COVID, the pandemic take quite a bit of our time and effort. We have to make sure that the assets are run well and safely. That's our first priority, and we believe that we have an asset base to grow organically. In my first 2 months, I haven't looked at any sort of different options.
I think the question is referring to the copper and molybdenum and porphyry environment at Yauricocha, and then the porphyry environment in Mexico at Bolivar. So is there anything to say about those in terms of any additional work or future plans?
Yes, we have engaged some consultants at the moment, very experienced consultants, and we are re-looking at those. The company a couple of years ago released some numbers on what we found in porphyries in Yauricocha, and we are very excited about the geophysical targets in Bolivar. So we're looking at those very carefully. You know, porphyries are a very different animal. They are quite capital intensive, and there's a different geology from what we have been used to work on. I personally have quite a bit of experience on porphyries, so that's why we're looking at it with the use of consultants to make sure that we take the right path. But certainly we're very excited about them.
The next question asks about the company's plans to increase production or increase scale and what impact it might have on your costs per unit at each of the mines.
Yeah, well, that's one of the reasons why we would think about increasing production. As you could see on that graph, that's our strategy for the future. So as we increase the scale, certainly our unit costs would go down, and that's part of the case to do it. So having said that, we are pursuing those opportunities as we speak.
And I think the next question I'll direct to Ed Gamarez, who's on standby. And the question is, will Sierra generate cash flow the remainder of the year?
Hi, Mark. Good afternoon, everyone. So on the Q1 call, when we suspended guidance, but before that, and with the outlook that we had, the plan was definitely to increase our cash flow. We do have the opportunity to manage our CapEx spend. So I think we can safely say that we can reduce our CapEx accordingly to provide the additional cash resources. So to answer your question, yes, I believe there will be a cash increase, but that will be more targeted towards management of our capital expenditures.
And this question is for Luis. Earlier this year, Sierra suspended its share repurchase program. Now that all three mines are operating and commodity prices are moving significantly higher, what is your view towards a share repurchase program at the current stock price?
Look, we haven't discussed about that, Mark. A share repurchase program is a good way to return money to investors, but we have to be very careful on how we allocate our cash at the moment. As I said, we are still quite vulnerable to the COVID in both places, in Peru and Mexico. So we haven't issued any guidance because we are not yet sure how this is going to develop. The pandemic in Peru is following a different path from what it followed in Europe, for example. In Europe, it went up and then went down. Here, it's still sort of flattish, going upwards in the last couple of days. So we have to be very careful what steps we take and how we manage our cash for the future.
Okay, and the next question relates to QC. How quickly can you ramp up to 1,200 tons per day, knowing that that 1,200 tons per day target is really a by end of year? And do you have adequate infrastructure in place to accommodate increased volumes, such as the tailings dam, electricity, water, etc.?
Yes, we do have at the plant. We have the infrastructure. Actually, the team had been working on the last while we were in current maintenance to improve the plant layout a bit. Also, we didn't stop work at the tailings, so we are there. I guess more is now how we ramp up at the mine and eventually bring it to 1,200 tons. But the answer is we want to bring it to 1,200 tons ASAP. So we're working very hard on that.
And I think I'll direct this question to Mike McAllister. In the past, the company has provided an NAV estimate in its corporate presentations. Do you have a view of NAV, or net asset value?
Mark, to provide an NAV would indicate that we have guidance issued, because I would need to know what the guidance is to be able to give an update on that. And so we're not prepared to give an NAV number at this time. You know, what we are working on studies and updating studies, and once those are completed, we'll be in a better position to provide that number.
Okay, and this question is for Luis. In light of the company's growing production profile, and recent strength in precious and base metals, what is your outlook for metals prices for the balance of the year and into 2021?
We don't have an outlook. I wouldn't provide guidance, Mark. I think our investors have been looking at how the markets have been behaving, and they can make up their own mind. But as a company, we believe that we are in the right mix of metals between copper, precious metals, zinc, and lead.
That's all the time we have today. Thank you, Luis, for helping us gain a better understanding of the Sierra Metals story. If you'd like to access our research on Sierra Metals, go to channelchek.com and type in the ticker SMTS in the search box. In the top left, check the channels section. Thank you for attending, and watch for more virtual roadshows coming soon on Channelchek. Goodbye for today.
Thank you. Bye.